Hey everybody, it's me, Gregory Mannarino. How are you today? It is Wednesday, April 25th, 2018. Alright people, here we go. As I had said a couple of days ago, we're starting to see a few things fall together, and it's proving to be very interesting. So let's start off with this. As I am doing this video blog, despite, once again, blowout earnings from a couple of really good companies, really big companies, stocks are down across the board. Dow Jones Industrial Average is down about 150 points. Okay, so this is what's falling in place right now. If you recall, a couple of days ago, I kind of went off the deep end about lines in the sand. I explained to you that you can't use a particular, let's say, rate of the 10-year, 3%, as a line in the sand. However, I did say that if we begin to see rates creep higher than that 3%, there was going to be trouble. Well, right now, as I am doing this video blog, the U.S. 10-year is over 3%. Yield curve is still flattening out. And that's the issue. So it's becoming a rate game now. It is becoming a rate game. And I believe this, if we continue to see, and I think we're going to, that 10-year yield climb, that's a problem. And I can't stress this enough. And again, if you're watching the mainstream financial channels, they're parading out, every Tom, Dick, Harry, and Sally to try to explain why, in light of or despite of, good earnings, stocks are down. And I covered this yesterday. I really believe that the yield curve is telling us that we're slowing down, and they refuse to admit, they being the Confederacy. They're refusing to admit that the yield curve is sending us a signal that things are not looking good down the pike and earnings might have peaked. It's the only logical explanation as to why markets are doing what they're doing. I mean, look, we know it's not real. It's distorted. It's twisted. You got a market which valuations are in bubble territory. And this is the Federal Reserve who's responsible for the next meltdown. Are we there at this point? I don't know. I know it's coming. So do you. What else is going on today? Gold is down significantly. Silver is down significantly. The dollar is up a little bit. Cryptos are getting hit today. So there's a lot of stuff going on here. Market's trying to, I would assume, reprice whatever it believes is going on right now, and it's going to be interesting to watch. But I guess the real story here, just like I said a couple of days ago, is now that we have the 10-year yield over 3%, and if it stays there, I mean, it could back off throughout the day. We'll see what they try to do, and you could watch this live in real time on my website, traderschoice.net, that bond market chart, right side of the page, underneath the chat room. It should really give you an idea of what's going on here. And that yield curve, people, I can't stress this enough. I showed you in the video that I did last night how you can watch the spread between the 10 and the 30. So let's keep our eye on that as well. With that said, let's see how this plays out throughout the day. Oh, I did enter a new position this morning. I posted it all over my social networks. Let's see how this one plays out. Last one did phenomenal. We'll see what this one does now. Again, you know how to play this. It's an initial position, people. I always open every position the same way. And I outline this where? In my 100% free, no catches e-brief, which you can get from my website. Look for the picture of Gordon Gekko, left-hand corner. Go to my publications page and download it. The one rule you must never break when trading stocks. I enter every single position the same way, and I play them the same way, and so should you. All right, with that said, I'll see you at the end of the day. Over.